Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Wednesday market webcast. Okay, so we continue his daily chart. We continue on this lower band riding the second standard deviation lower band. Down, down, down we go, right? So this was back. This was that CPI number that was ugly, okay? They've taken it down from there. We printed as low as 36.13 overnight. And, you know, the bears, the price action yesterday and the price action, you know, so far today, and we'll see it's setting up the same way. You know, we had a high up at 37.33, half an hour off the open or so that was rejected, and they go down and they take out the prior day low. Well, it's already taken down the prior day low here. I'll be interested to see once we get into the regular session just how high the bulls can take it before that selling pressure comes back in. This is your classic sell rallies, your classic bear tape. We're below all the moving averages are lined up. What do I mean by that? 200, 100, 50, 20, and 9. Okay? So, you know, there's rainbows, and then in periods of consolidation, you got spaghetti. On longer term time frames. This, though, is your classic just rainbow down, where, you know, we've spent long periods of time in the market rainbow up, where you would see these same moving averages completely inverse, and we would spend plenty of time above the 9, 20, 50, 100, and 200 as we go. Hourly chart, and I was explaining this to my subscribers yesterday while we were trading in the room. It doesn't feel like it because we've been in such a wide range, but what we've been doing through the vast majority of this week is just consolidating. These hourly bands are not super tight, but they're not wide. They're not like this. You know, it's been a consolidation in a wide range. And what we saw yesterday was the bears continue to be successful in these consolidation periods. So we consolidated Monday, Tuesday. And you see here, you know, a little breakdown, a little bleed out. And they've just, since, you know, 6 o'clock, popped it. Bank of England is going to carry out temporary purchases of long-dated UK gilts at whatever scale needed to restore order. Delays quantitative tightening until October 31st. So the UK is there. The UK just blinked. We'll see if everybody else follows suit. Doesn't feel like they're going to do it over here, though, right? I mean, we all read the same stuff. So we'll see how that balances out with everybody else. So you've got the hourly mid-band coming in 36.52. Volume-weighted average price 36.41.83. Proprietary moving average, you know, it's sitting there along with the 5-minute mid-band at 33 going on 34. We'll have to watch the low, obviously. And I don't like coming in here. I don't call tops. I don't call bottoms. I don't do big targets up or big targets down. That's why I don't spend a lot of time on Twitter. So I spend a lot of time with my subscribers in my chat room, you know, actually doing setups and executing this stuff every day, because, you know, it's not about being right. It's about, you know, being consistent and pulling handles every day and growing your account. That's what it's about. That said, one of these little bottoms, one of these little lows is going to pop for a few days. Is that the low? Doubt it. I mean, you know, but you never know what the low is until the low is there. And you can guess that every low is the low, and you can say when the low is finally in that you were right and delete all the other stuff. If that's how you want to live your life, that's fine, but I have to be able to sleep at night. So you have a low here. It's the low of the moment. Just like I always told you guys, you know, when we're going up, you have the high of the moment. I expect the low of the moment to get taken out at some point. I also expect there to be some profit taking down here and these little relief rallies. The bears have done a very good job at suppressing the relief rallies. They are in absolute control of this tape. And any pops that we're seeing, any lift we're seeing, and you can be long, and that's no problem. But understand that you're counter trend, and when it stops working, you got to figure out something else to do. But you don't want to be, look, bear markets have bear market rallies. They are violent. They are fierce. They go farther and longer than anybody thinks. You don't, and if there's a bear market rally going on, you can be long or you can be on the sidelines, but you cannot be short. You can't sit there and throw darts at this thing saying, this is the one. Nope, this is the one. This is the one. Add. That is how you unwind a lot of hard-earned handles that you've made over the last few weeks. If you just can't deal with it, if you can't be long, if you're one of those people, then oh my God, go sit over there and wait for it to be done. Take your emotional support animal and go sit in the chair and wait for the thing to stop going up so you can go back to perma-bear land. If you're going to be a trader, you have to go with both sides of this tape. You have to concern yourself with the 10 handles in front of you and then do what's next. Figure out which side is winning and be on that side. Your side is the side that's making money. Okay? Nobody gets extra whatever at the end of the month because, well, here's an extra X number of dollars. Thanks for supporting the bears or thanks for supporting the bulls. If you do, please let me know and we'll all go over there. Okay? Trade what you see. Trade what price is doing. Don't fight moves like this. And I'm not saying this thing's going to go any farther than where it's going now. It's struggling with the hourly midband. I would expect it to do that. But there are going to be real life, multi-day, bear market face ripper rallies. And you can really get hurt if you short into them and then add and do really dumb stuff. Don't do really dumb stuff. All right. Everybody have a fantastic day. Be safe, be healthy, take care, trade them well. I'll talk to you tomorrow.